morning.
Good morning, Doc.
Oh, we got background music?
Yeah, I got like a waiting room going right now.
Okay.
I notice a lot of people join like 5 minutes late. So I think if we get this on, it gives people time to say, "Oh, it's ready," and then they storm in.
Okay.
No, they just wait a second.
All right, let me jump off the stage and finish my notes.
Oh, you're not on the stage yet. You're good.
Getting that SPY string the person requested really takes a lot more time because you've got to calculate the SPY divided by SPX and then convert that. I might go for a shitty just divide SPX by 10 and make it close enough instead of being mathematically more exact. It just seems to take so long. Obviously, that's not me calculating it. That's ChatGPT doing the math. It even takes ChatGPT so long to do the math. So, whatever. Okay, let's see. People like, here's the NQ string, by the way. People like that. I'm going to text you something. Tell me what you think of this. This is from Kill Pips. He's pretty good. And this goes with the chart of his strings that I just put in. Okay? You hear me? Yeah, I think so.
I can hear you, but right now everyone else can too.
Okay, here, take a look at this.
Oh, on Discord, let's have a look.
Now let me just put in what his chart would look like. I gotta get back to my note. Get the note ready in 7 minutes. It should be ready in 7 minutes. We're just crunching numbers now. I know you have your system, blah, blah, but just take a peek.
Did you already send it?
Yeah, I'm gonna take a picture of the chart.
Oh, okay.
I'm gonna send it, and I'll send you the string that goes with it. Where did I cursor go? Let's see if I better be ready because it's already too late. There it is. Oh, fucking time, okay. Create new post. That's not bad. Okay. Good enough. We're going with this. I got 2 minutes, so just about to get it done, huh?
Yeah, 2 minutes.
Okay.
Okay.
Good enough. We're going with this.
All right. 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 Yeah, I'm rushing to get mine done too. I'm almost done.
I guess I have to figure out how to cut 10 minutes out of my morning little routine here. So people hear that little background music
They do. Yep.
early. Also, the stream already started,
Yeah.
but can they hear us babbling?
Yeah. That's why I kept going off stage.
Okay. Okay, so good morning, everybody. You hear us babbling. Okay, so I guess we'll do it this way. Good morning, everybody. Oh man, I want to do the countdown. Hold on, I'll do the countdown anyway.
Intelligence is not a privilege, it's a gift.
I think fast, I talk fast.
I love this game. I live this game.
Okay, good morning. We're playing with the media assets. Okay, let me let's cut right to the chase. I'm not sure how many of you had fun in the overnight session. I had a little fun and a little heartburn. But you probably know me by now. I sold put spreads, Frankensteined them a little bit, turned some of it into broker wing flies and went to bed, woke up, the put spreads were gone. God bless America. Okay. Anyway, let's I guess I'll start with where we are, which is 69.10. Okay, so you wake up, you go, and there's 6,900. We pulled back a little. Gee, that's not too good. Of course, you missed the fun. Overnight session. Where was it? Just kind of quick. Okay, so we started out, choppy little pullback. That's around where I sold some put spreads and added some somewhere down here. I went to bed and said, if it's the end of the world, the 50,000 I lose won't matter. And so long story short, we just kind of sold off hard overnight down to 69.40-ish almost. I'll show you why that matters in a minute. And then we totally reversed, and now we're kind of back fighting around 6,900 where we're supposed to fight. Okay. Okay. So I guess a little recap, official January closed constructive. We were up a little bit for the month despite all the noise. SPX was up 1.4%. RSP was up equal weight, was up 3.3%. Rotation, de-dollarization, broadening, all that stuff. But breadth got kind of sucky later on in the month. Rotation stayed defensive, staples, utilities, healthcare, the usual suspects. Cyclicals went nuts. Cyclicals, gold, commodities, copper, that kind of stuff. Went nuts until Friday when the crowded trade got uncrowded, and everybody runs for the exit at the same time. So they ran for the exit, oversimplification. Gold, silver volatility was like parabolic, I don't know, 16 trillion standard deviations. A little bit of a hyperbole myself. The whole thing unwound, and here we are. So Friday, down 0.4, but we stayed within the expected move bands for the week. I want to point that out because if you just, okay, well, you can just do whatever you want. Let me find the chart. Where is it? Here it is. Okay. So here was last week's expected move. And it looked like we were going to go through the top. Then it looked like we were going to go through the bottom. But then we ended up kind of right in the middle of the expected move. It just seems to be like that. And so here's this week's expected move, roughly the same range because of the little pop in the week. And remember, we hit 7,000. We hit the magic 7,000 number for a brief second. So this week's expected move range is 68.28. Call it 6,800. Call it, if you really want, call it down here, 67.90, the breakdown low from whatever it was, the invasion of Greenland. And the top, 70.50-ish, round number. And that's kind of what the broad landscape for the weeks looks like. Speaking of the broad landscape for the week, okay, so I got this, metals, got crushed, whatever. I wanted to point this out. I'll take a minor victory lap here if I can find it. Hold on. I'll just pull up the chain. Give me 1 second. I gotta figure out how to do this. Give me 1 second. You can pull up your option chains yourself, class, while we're doing this. We're going to be looking at ZSL. Here it is. Okay. ZSL, Doc, what the hell is that? Oh, ZSL, it's the ProShares Ultra Short 2X Silver Fund ETF. Go figure they had such a thing. Of course they had such a thing. One day, sitting there while watching silver go nuts, I said, there's got to be an easier way to short this that's lower risk, so to speak. And ZSL popped up, and here it is. Now, notice I wasn't the first person on the planet to think of it, because when I got there, you see there's 24,000 contracts. That's where I was. It was about 15,000 when I put the trade on. Everybody piled up, a lot of gamble. This shit's going to move. That's what that means. And so you see, 33,000, 30,000 contracts. You think this piece of garbage has this many contracts in normal times? Hell no. Also, I like the fact that it's cheap, so I also bought shares. It's almost what I sometimes call an option without time decay. And this thing was 8 not too long ago. Now, you might be asking yourself, or asking me, Doc, what about drag? We know these 2X ETFs have drag with the repricing every day. Yeah, a little, but with silver and backwardation and the way this thing is constructed, there's very little drag. There were some days where silver was up and this thing was flat or even up a little bit because of the way it's constructed. So it's pretty cute, pretty cute. So anyway, I put that trade. I told people in the Discord, I don't think too many people followed me because they figured I was crazy. But anyway, that's this trade. Oh, we have comments here already. Oh, good morning, Selena. Anyway, so that's the ZSL thing, victory lap. Planet here says up 2%. Okay, news of my death has been greatly exaggerated. Okay, let's get back to here. Okay. Friday recap. All right, and here's the chart. We'll look at it again in a minute. Overnight, Globex hit that big 68.40 strike. Let me show you what I'm talking about. So I'll go to options depth, not the Discord. If we go to options depth, we look at where the bodies are buried, 68.40, large negative gamma strike, overnight hedging, kind of got a little crazy. And so that's where we were. Now we have, and I'll get into this a little more detail later. So let's just look at the boxes and zones real quick. Let me see if you can see this. I do this on. I don't think you could see this. No, you can't. Okay. One day he's going to have to show me how to draw boxes while I'm talking, but that's above my pay grade for now. So you have 68.50 to 68.85. That's one lower zone with the two-way chutes and ladders over here. We have 68.85, what I'm calling the bottom of the chop zone, taking us up to around 69, taking us up to around 69.25. So this zone in here, 68.85 to 69.95 with what I call fishbone pattern, going this way, fishbone, like when you fillet a fish, fishbone pattern. So it's two-way ladders. Really, from a gamma point of view, anything can happen in here. If we can squeeze our way above 69.25, which doesn't seem crazy in this day and age, I think the top of the expected move when I looked at the morning was around 69.55-ish, 50. Expected move was around 50 points. I imagine that's calmed down a little bit now. Then we have a good old friend 69.50 on top. So we have a zone on a zone on a zone. And if by some miracle we get above 69.50, we have a whole nother ladder up here towards 7,000, the intraday all-time high, and more stuff up here sold, positive gamma. So that's basically the broad landscape. Let's go back to see what we got in the notes. Okay. Oh yeah, let's talk about this real quick. I put this out on Twitter. And I'm not so proud of the posters of my graphics. Where is it? Where's my graphics? Come on, man. There it is. Markets in turmoil. The overnight session, shit was crazy. So I wrote a little bit about the VIX spike. Why the futures are calling BS on this pop, and I'll tell you why. So I saw what was going on in VIX, and I said, before I went to bed with all those put credit spreads, I wasn't too sure. But then when I woke up, I saw VIX was, VIX had just kind of started opening up at 3:15 a.m. at 19, by the time I was looking, we were like 19. We were over here, 19.35. And what were the VIX futures doing? The VIX futures, if you look here, were basically at the same level. That's not supposed to be. There should be a 2-point difference, 1.5, 2, whatever. There's got to be some kind of difference. So either VIX is lying or the VIX futures are lying. Since VIX futures are what the VIX is priced off of, VIX was lying. That's what that has to, that's not what the VIX initially priced off of, but that's what it trades off of 30 days to expiration. So I said VIX was lying, and it stopped lying a little bit. It came down from 19.35 from 20 when it was totally lying to 18.75, and this is 19.1. So this is still too high. I would say 18.5, 18 should be roughly in the ballpark, but probably more like in the 17 neighborhood, and we'll see. So that's that. That's that. Okay. Now, I'm not going to talk about the correlation thing, only to highlight what we got going on this week. Where is it? It should be in my notes somewhere. If not, I can just tell you. Maybe I didn't put it in there. We have a bunch of earnings this week. We have earnings in a broad array of sectors. We have a couple mag earnings, Google and Amazon. We have, who else do we have? We have Disney, we have Planeteer, we've got, let's see what else we got here. Here's where I do all my scribbling. We have three of Mag 7 positive on the year to date. I don't know if that ever made it to my note. Okay. Here we go. Earnings. We have Disney, we have Planeteer, we have AMD, we have PayPal, we have Google, we have Amazon, plus a host of other people. Along with that, we have ISM, JOLTS, unemployment claims weekly, and NFP. So we have macro stuff. We have read through into, we have drugs, chips, consumer. We have all that stuff. So the market isn't going to be looking at one thing. So it's going to be algos playing chess with each other, and algos with different time frames and different mandates. The pension fund for California and the high frequency algo are not playing the same game. So they're not playing on a different board. The trend following CTAs are playing on a different board again. The vol control funds are playing on a different board again. And we have the sovereign wealth funds. And then we have the FX, Japan, carry trade, yield. So we have a whole bunch of crap going on, and everything is kind of immobile, it's kind of rocky. And so it's got to get back into alignment. And we have Warsh. We have a lot of misconceptions about Warsh, the new Fed head. Don't get me started with that. I already wrote a little bit about that over the weekend on Substack. You'll probably hear more out of me about that later on. Okay, so I don't know if you could see that. Hopefully you could. If not, I read it to you. Okay, let's get back to over here. All right, so I kind of let me go over the roadmap real quick, and that's what my paid subscribers get, along with where the hell is it? Along with the string with updates, et cetera, et cetera. And so 6,900 obviously is the intraday pivot. I already showed you why 25 was the top of the chop zone, and this just follows from what we saw on the options depth profile. So really just I could go that. We're just gonna go look at the chart. You guys know how to look at charts. So top of the chop zone comes out here. Chart wise, in the middle of no man's land, kind of. Oh yeah, let's remember the 50-day moving averages down here somewhere. The 20-day is right around the 69, 20-ish area, I think. Let me see. I don't have it on this chart over here. Yeah, some people like the 21 EMA. I'm old school. I don't use EMAs. I just use moving averages and their reference points. There's no magic in them other than everybody looks at them. Okay, that's it. I'm gonna exhale and do a little bit of work on the background while Bad Hombre, aka Chewy, or it's a Chewy, aka Bad Hombre. Well, it's one or the other takes over. You see, he's got his Bad Hombre in the background. Is that Pancho Villa in the background? Who is that?
It's Zapata.
Okay, that's what I meant.
Yeah, close. Let me pull up my chart for you guys.
It's double digits here, folks. It's finally above 10.
Lucky you. Bet the goats are happy about that.
It's a sweltering 11 degrees.
Yeah, 15 degrees here in the city is brutal. I can't imagine what the wind out there is like. Okay, guys, pretty simple game plan today, which is nice for a change. The less levels I have, the better. Helps me hold trades longer instead of scaling out. What I'm looking for here right off the gate is where we open relative to 69.25. That's my pivot. I'd like us to maybe open a little bit below around 69.15, 69.13 for us to then work our way back up to 69.56 area. So down for up would be my plan A. If we hold above pivot at open, I'm looking for plan B, which would be pull into 69.55, come right back down to pivot 69.25 and play that nice 20-point range there. After either of those two scenarios, I'm looking to exit the range. If we pull above 69.60, I'll look for a nice move up to 69.90, and then we stall up here. If we can't hold the pivot at 69.25, I'll be looking for 68.82. So I think we'll make our way up to 69.90 or 68.82. All depends on the pivot and where we start off for me. That's kind of my game plan.
So the way you said that was interesting. So maybe you can explain to people what you mean. You said something like, okay, we have this 20-point range, which you're going to play, and you kind of have an A and B of the 20-point range. Then you said, if we exit the range, or then you wait for us to exit the range, whatever, then you have, so it's almost like two trading plans in one. How do you operationalize that? What do you do?
I would first trade this as if we're going to trade sideways, and not give out any profits, which means if we get to, let's say we're trading A, which is a bounce from 69.15 to 69.55, I'm not holding past 69.55. I'm out entirely. I don't want to potentially hold for more for us to just make our way back to 69.25. That's the profit I've made there. Is too much to give up. Even though I haven't locked it in, to me, it's still my money. So I like to lock in that money, expecting we're going to move sideways. So thinking that the trade is dead. Once we are outside of the range, then I can start thinking, let's trade a trend. And that whether that be upside or downside, that just depends on price.
Okay, so that's a nice, clean way of thinking about it. That's very clean. It's almost like 2 days or 3 days. It's a plan that has a plan within a plan.
Right.
And so do you teach that in your course?
I do, yeah. I think where I see new traders struggling early on is they're up. Let's just talk options for a second. They're up 40% trading directionally on options, and then they think, oh, this can go a lot further. They're hoping for 60%, 80%, even 100% of a trade, and then they give back profits, as opposed to taking 35% on a trade and then cutting it, waiting for a next setup, or just waiting for the next day entirely. I saw a tweet the other day that I thought was pretty interesting. It was like 13 trades of 10% earnings per trade is equivalent to a 5,000% trade. So
Say that again?
really, I believe it was 13 trades at 10% earnings a trade is the same as one 5,000% trade.
Right. So West Coast offense, hit your singles, make your money, and don't wait for a grand slam or nothing.
Exactly. Yeah. Don't wait for the buzzer at the end, the whistle. Take your profit and see where you land. I think that's the easiest way to start making money quickly when you're learning how to trade.
And I do something similar. I mean, forget on the long scalps, which we know I have paper hands. I tend to make money, but I tend to get out fast. I see I have a profit, especially on a long. On a long, it's not hard to get a 15 to 25% profit with a fly or with a something. I run away, could have had a lot more. That's a whole separate story. Don't follow me for how to hold on to a long-term trade advice. But how to enter one, I can tell you. That's besides the point. Guys in the room do much better than I do on my plan. I'm on the same long time. So I say, enter here. They do, they make more money. Good for them. That's okay. That's what I want to do. What I do want to mention about this is what I do that might be similar. Say, what I typically do is iron condors and butterflies. So let's go say on iron condor, I'll sell put credit spread with the idea of a similar range with the chop zone. Once we're at the top of that chop zone or whatever, and I've got 50, 65% profit, I'm out. I'm closing that trade out and waiting for the next setup. And I might re-enter again, whether it's put spreads, call spreads, flies, whatever. I'm not going to sit around and wait for a reversal or whatever. I'm going to take the, I call it TIT, time and trade. I'm going to take the trade and take the money and see what the next setup is. And that's what you teach.
Yeah. Yeah, I call it banana skins. You know what I mean? You just take the banana skins and go.
I like that. Not peeling the onion. I mean, onions give me heartburn anyway, so I like the banana better. Okay. So that's what's going on here. Vol Trader, I forgot he was stuck in traffic or whatever, so he's not here. Let's see what else. I mean, it ended up being a relatively simple setup. Now we're just following the plan. Now it's like nothing to see here. If you woke up late at 8:30 and you just kind of stumbling into the in front of your screen with your coffee, and you go, oh, look at that, a little 20-point pullback, whatever it is. Okay, let's see what happens. And I like it when we get these crazy volatility pops, especially for the short term, because then all those options get juiced. Market makers hedging, they have to sell to hedge out the puts or to neutralize their deltas. And then even if volatility stays, but it's already fading, that creates that reflexive buyback. So I love this. This is my neighborhood. This is my neighborhood. This is where I like to play. Let's take a look at a couple other things. So I've been looking at this here. It's not going to update until later the day. So I might have done a write-up on this in the Discord. I do one on Substack and one on Twitter and one everywhere because I'll be writing forever and reformatting forever. But basically, long story short, a lot of people look at the VIX and VIX futures difference, which is what I was looking at over here. And that's fine. That's useful. I look at it too. But another cute way I like to do it when I take, basic algebra. Okay, so we have VIX minus the VIX 1 month and VIX minus the VIX 2 months. What that's giving us really, if we're factoring out, remember factor from intermediate algebra, we're factoring out VIX in this equation. So really it looks like, if you didn't think about it, VIX 1 month minus VIX 2 months, right? So it looks like if you do basic factoring intermediate algebra. However, what this does is it gives you the curvature. How's the VIX 1 month versus the VIX versus the VIX versus the VIX 2 month. So it gives you the curvature of the VIX complex a little better. So it's kind of a cheat way to visualize it because I don't know the fancy way to make it happen. And so with that said, what we're basically looking at is it's VIX volatility, overpriced, underpriced kind of thing, using the VIX, using the difference between the VIX and the VIX futures. And what do we see here? And we just turn it into like one of these oscillator kind of things. What do we see here? When we get down here, is a buy. When we get down here, is a buy. You know, is it going to be perfect? Sometimes it's here, sometimes it undercuts. No, but it's a good broad timing mechanism. A good broad timing mechanism. And we conversely, we see when we get up here, shit's too cheap. And now, you know, just like if you were looking at RSI or whatever, it can kind of stay elevated and you kind of get the divergence thing. We happened here and we get that. And then we kind of stay in the middle of the range, no real signal. And now we're kind of, you know, so it's not an official signal here, but it's in the minus area, minus 2.8. That favors a reversion back up. Not necessarily today. You know, if you see these signals are, you know, multi-day signals. And of course, from here, you know, we've had that happen too. But it certainly doesn't say danger, danger, Will Robinson. It certainly says VIX is a little funky. And yeah, the other turn in the punch bowl is we have the dispersion, the correlation, which, you know, they dragged me into the VIX space. And here's another way of looking at it, the equal weighted VIX versus the VIX difference. And that's right in the middle. I want to find the, where is it? I have so many of these dashboards. Where is it? You guys, one of these days I'm becoming all prepared for my presentation all at once. But probably not tomorrow. All right, we're just going to have to fudge it and do it on the road here. We're going to put over here where's correlation? We'll just put correlation here. If I could find core 1M. Discuss amongst yourselves. Correlation over here. I'll put VIX EQ, which is the constituent volatility. And I see, so correlation came off the floor, which is good. When correlation is down here where it's been around the 8 area, that tends to be no bueno. I don't know how to get it. There should be a way to get these cursors to line up. I have it somewhere else, but I'm not going to bother looking at it. You can take my word for it. So what we're looking for is, as big cap earnings come out of the chain, we're looking to see what happens to constituent volatility down the road. It's kind of high at 69, at 39 rather. We don't want to see correlation spike along with this spiking. We want to see how this mobile comes back into balance. I have a cute little picture that somebody did, but I did a write-up on this last week. It's on my Substack. I think it was a freebie. You can find it. So that's something that we're just going to be watching. So right now it's looking okay. Thank you. I mean, yeah, for telling Ben Ombre that, because that's so important. And traders, am I looking to put great spreads at the open? Come on. There's a bear blank in the woods. Of course I am. Hold on one second. Give me 1 second. Let's switch screens.
One time you decide to bleep it out.
Yeah. The one time I have 4,000 rights.
Yeah.
Suddenly I'm politically correct or whatever. Okay.
Right.
Because you know me, that's how I roll. All right, let's present, share the screen. Am I looking for put credit spreads? And reminder, I sold ES put credit spreads and closed them. Find a small, smart target, take a profit. Boom, that's it. Take 5, yeah, exactly. Oh, and this guy here, this is the famous 112 trade that I put on last night. What a 112 is, for those of you that aren't familiar with it, is, well, I'm going to show you this real quick. It's pretty well-known trade for us vol sellers. You buy the 1-1 is a debit spread. Buy the debit spread, and that kind of helps contain the margin. And in case there's a disaster, it helps a lot. And if you're nimble, you monetize it. You take the fake pain of the short puts, and anyway. But and then sold all the way down here, 5,000 ES, 5,000. We ain't going to 5,000, folks. I'm sorry. So I did that overnight. It's up around $200. I'm not going to close it out now, but I'll probably close it out soon. Usually I hold these for around 50% profit, but getting to Selena's point and to Beidambri's point, to the point that we've been making, a 17% with profit in 8 hours or 6 hours, not so bad. Take the money and run, right? So anyway, I'm going to decide how I want to manage that later. But that's not the topic under discussion. So this, just so you know what this crazy thing is, this is just my way of keeping track of the JP Morgan column, the March JP Morgan column. I don't mind, I'm losing $90 or making $90. I'm going to trade around it later. This is just a way of kind of marking the JP Morgan column, the March, the big one. So anyway, that's what that is. So let's take a look at the put credit spreads for today. So what do we know? We know we have this zone, 85 and 45, with that 40, the overnight low. I could do a little thing on the 112. I could do a little thing on the 112s. Maybe that'll be a topic for one of our Wednesday night webinars. There's a lot of stuff on it all over the internet. I didn't invent it. A buddy of mine, Tom King, does it. A lot of people don't like it. If you don't know how to manage it, you can get screwed. He had 3 losers last year on it, and he had used it as a stop, and he made about 40% annualized on his buying power doing it. So it's not bad, it's a reasonable trade. He's been doing it for years. It's been doing it for years. Tom King, everybody knows him. Okay, so let's well, not everybody, but people in the vol selling space. Okay, so let's see what we got here. So ideally, I want to be, we don't have big numbers here, but we have an expected move that takes us down to around where the expected move take us to. If we believe the 50-point expected move, and we're at, I guess how you think through a trade, how I think through a trade. We're at 17, so 50 points takes us back down back down toward the EM bottom. Oh, here, the EM bottom is still here. EM bottom. So we want to be below that, and we want to have some positive gamma or something that's going to protect us. So with that said, let's see where we could go. 68.20, 6,800, 65 cents. That's pretty juicy. Let's see if there's anything below here. I mean, dude. Okay, you're not gonna get filled on that, but I would put one in just in case you get lucky, in case I get lucky, because we can pull back easy. So this is still pretty spicy on the vol side. So for those folks that like to sell 5 wides or 10 wides, let's just look at a 5 wide down here near the overnight low. And where would I go on top? Something like that. That looks pretty reasonable to me for a 5 wide. So there's another way to do 5 wide. We're looking for a quarter to a third the width of the spread. That's not what we're doing here. We're looking to steal. So 55 cents, selling the 30.25 put on the bottom and the 69.80, 69.85. Not investment advice. I'm just teaching you to fish the way I fish. You can fish however you want. I'm going to put that in. Okay. Let's see what else. Now for the wider variations that I like to do, I'm going to go here for 70 cents, 50 cents down here. I'll take it. 68.15-ish. On top, what looks like a bridge too far. I mean, 80 looks like a bridge too far. I'm sorry. That's a decent iron conduit, something up there. So what am I selling? Okay, let's go back to the options depth. Let's go back to this. Let me get rid of this big 6800, which will provide decay fuel. This will provide decay fuel. This will come to a 0 delta or get realized, and then there's a vol event and something happens. You're gonna take something to happen for that to happen. Now, given the climate we're in, it's not crazy to think that something might happen. Don't get me wrong. 68.35. And let's just leave that there. It's not going to really matter that much. Okay. So up on top, kind of counting on the 50-55 top of the expected move, we could kind of come up to 65, not likely, but we could come up into here. That's that second range that Louis was talking about. That second range, if we stay within that 20-point playground and decide we want to try and head up. This is also the high, the Friday high, I think, was at 65. So I'm willing to go 20 points above it. Up here, where I have this 70-75 positive gamma blocker and sell up there. I'd love to get above 95, and maybe we look at that for 1 or 2 DTE trade, which we're not going to do right now. And that's basically it. Yeah, you've seen a lot of videos on it. Yeah, there's a lot of videos, and we can just kind of talk it through how to incorporate what gamma levels, what visibility we do have out in time. So yeah, put spread at the open. I mean, clearly whatever cross-asset nonsense was going on is nonsense for now, but you never know how we open. We have the mags. Yeah, also in the overnight session, we had Bitcoin hit an April low. We had all this leverage stuff. I saw some really big bond trades in the overnight session as we were tanking. I didn't bother to try to decode the big trades in the 2-year and 10-year. Duh, how surprising is that? And so all this was going on, and kind of like the mobile is trying to get back in balance. And that's it for now. It's 9:13. I'm going to get the rest of my posts out on Discord and on Twitter or whatever, and give them an update where we are on my on the course we're developing.
Oh yeah. Waitlist should be public by the end of the day. We'll send out a link on Substack and the Discord. You'll be able to sign up for the waitlist, and we should have that program up and running. When do you think, Doc? By Sunday?
Yeah, hopefully after the weekend, by the end of the weekend.
Yeah.
Depending-
So I think we'll have that ready for you guys. We did update our pricing on Whoop. We're, I believe now, I can't use my mouse right now. It's charging, unfortunately. I have one of those Apple mouses. But they're matching Substack prices now. So if you were paying for more or whatever, make sure to upgrade that pricing on whoop.com. The link is in the description. And yeah, we're excited to share that program with you guys coming out soon.
Okay, great. Thanks, everybody. And stay safe.
Bye, everybody.